Okay, hi. So this is our second session of grading business studies and accounting studies. So last week we learned regarding what is accounting, right? We learned what is accounting through a PDF. I explained you what is accounting, what are the objectives, what are the sub-objectives, what is the meaning of a transaction, and what is the meaning of an event. And also we had an idea that transactions and events are the inputs in the accounting process now, and also finally, I discussed what was the elements in accounting. So we listed out it was assets, uh, equity, liabilities, income, and expenses. So how many are there? We are taking income and expenses as a different subject here. So, Lama, let's go for assets. Now, first of all, we have to go under through your textbook, right? So, though I'm giving notes, at last, at the end of the exam, you are referring the textbook, right? Because mostly of your exams are tested by the book. Okay. Okay, today we are going to learn regarding the first element in accounting, which is assets. So, Lamai, generally see your textbook, they are telling that the resources that are generated as a result of a past transactions are simply called as assets. That means if you are taking, yes. So, this was the, yeah, so, okay. Okay, now Lamai, so see here, at last we explain all this. So it is there in my previous video, you can go and watch. So today is the second session for the part 2. Okay, just now next let's go. Okay, so, so what they are telling, okay, first of all, we have assets. Okay, so what they are telling that assets are because of a past transaction. What is so we learned what is a transaction? Transaction means it is an exchange of resources between a business and other parties. Past transaction we are considering as what are the future transaction. Past transaction means the transactions which you have done. You have done cash purchases. That means you have done, right? You have done sales, or you have even obtained a bank obtained. See, even in the world itself, it is in the past form. So there you can identify it's a past transaction. That means you have done the transaction. What are the examples of future transaction? Yes, that means you're going to invest here. Then what are the future transaction is you're going to invest in this industry. You're going to having a planning to invest in a machine. These are future transaction, but in asset is a result of a past transaction. Now, now mind, if you are telling asset, now I can do like this. I can just give you the definition, continue my class. But no, you have to thoroughly understand. If you are having a thoroughly an understanding on this as what is asset, if you know how to differentiate in a transaction, it will be very helpful throughout your exams also. So assets are generated as a result of a past transaction. Okay, so you can tell out of a past transaction. The other thing is now example you have to. Okay, for examples, what are the assets? Assets mean you can tell all the tangible things in your business. So for example, let's take machine. Machine, oh, let's take a machine. And another thing is here, you are having a, let's take machine for, so machine is a output of a past transaction of what past transaction? Yes, you are purchase of a machine by a business. Right, Lamai? So because of this transaction, so it's a past transaction. Okay, so because of these, what is the output? A machine being output. Understood, Lamai? So that is how purchase of a machine and the output will be what? The output will be the machine. Okay, so let's see now what we should consider. So first of all, it is an output of a transaction. The other thing we should consider is whether it brings us economic benefit, future economic benefit. So you have to consider whether it gives you future economic benefits. Okay, so we have to see whether if you are taking asset, you have to see. Now they are giving you option, right? First of all, you should see, is it as a result of past transaction? The other thing you should consider is whether it is giving me future economic benefits. Now, first of all, now because of machine, what you can do? Yes, you will manufacture, right? To this machine, why you're taking machine in business? Yes, if you're having a manufacturing business, what you are, an example, you are having a textile business. So what you are manufacturing? Garments. So what you need a machine, right? So now let's take a sewing machine. So because of that sewing machine, what do? You sew your clothes because this machine is very important for your output of your business. That means for the clothes. The clothes will be your output. For that, in order to become an clothes, you need a machine, right? So through machine, you are earning. Because of that machine only, you can stitch the clothes, right? That's why that is future economic benefits. So when it is as an output, as a cloth, then you can sell it, right? You can sell it. So that is what they are telling. So, okay. For example, what if an asset which is not giving you a future benefit? So we are considering that one as an asset. Okay. Let's take for example as Now let's see what examples. Okay, Raman. So what if we take, okay, what if we take as, yes, bank loan. When you're taking a bank loan, Raman, see here. So bank loan. So we know that it is a bank loan. Okay. So what is the bank loan? From the bank loan, now what you're taking a loan. Because of that, it doesn't give you a future economic benefit, right? Does it give you? No, it doesn't give you. It doesn't give you future economic benefits. One, does it gives you future economic? No, you are payable for it. You are payable. You are payable. That is how we are identifying the assets in our business. The other thing, so first we are seeing whether it has a future economic benefit. The other thing is waiting and the underlining that in the red color, so it will be very easy in understanding output of a transaction. Okay. The next one, let's see what is the things. For example, so and also you should see whether it can be controlled, whether it can be controlled by the business. You have to see whether it is controllable. Controllable. You have to see whether it is controllable. You have to see whether it is controllable by the business. For example, let's take one thing. Okay, Lama, even in your textbook, there is an example. Okay. Now, first of all, let's go whether it is using controllable by the business or not. For an example, let's say, yes. For example, let's say, yes, you are, okay. Now, example, now, every business doesn't purchase building, right? Because of too much of investment. Because normally a building will be like millions, right? So instead of that, some business what they do is they rent building, right? What they do, rent building. So what is the factor we can see here? Yes, it is you are renting it. That means you are taking a building and you are conducting your business in a rent basis. Okay, so you are not the owner of that. So you are on a rent basis. And also it is also output of a transaction and also yes, building loans give us future economic benefits. Yes, because in that building only you will be doing your business activities, right? But there is one thing that is being violated. The next factor that we should consider in an asset is whether the business can control the asset, whether the business can take a decision on that asset. Now, example, what if you want to, I want to expand my building. Now, can you, like normally, logically, you are going to a rent house. Can you go, when you go to a rent house, can you do according to your wish? Can you break it down and delete it? No, right? So like that only, you are the controlling for that rent, right? So like that, these rent buildings are not considered as an asset. These rent buildings are not considered as an asset. They are not considered as an asset. They are not considered as an asset. Understood. So you should see whether so you can see these are some characters. See how that means throughout your textbook. Okay, throughout your textbook, they are see here. See now I have explained everything here. Assets are the resources that generate as a result of a past transaction and what purchase of a machine, purchase of a motor vehicle. You know what's a transaction, right? So next one, let's see. Yes. And it should be measured. That means it should have a measurable value. What are they doing here? Is yes. In order to recognize an asset in accounting report, the value should be able to measure reliability. That means you should see, okay, you should see whether it is giving us future economic benefits. It is giving us future economic benefits. Okay, the other thing we have to consider is, okay, yes. So see here, if any, see this point, if any item does not generate future economic benefit, that item cannot be considered as an asset. Okay, this is one of the important things. Okay, this is one of the important. If any item does not generate future economic benefit, that is, that item cannot be considered an asset. And also, it should be controlled by the business. The next factor, what? It should be controlled by the business. So this means the business should be able to use it according to the risk creation. Risk creation means whether you can take decisions on it. So what is the meaning of this? That is what it is considering here. Okay. The next one, let's go. Say to this this yes, this question. Okay, now let's go for the next part. Okay. This. Okay. So see here, Lamai, the following characters are observed in a set. You can see it arose as a result of past transaction controlled by the business, and also it has some which economic benefits to the business. So these are some important points you have to know. Okay, so next one, let's see. So according to that, we can form a definition here. An asset is a resource controlled by the business. So see here, an asset is a resource. It's a resource, right? Resource means what you can do anything with it. That means a resource means the things that is needed for a business activity. So it is a resource controlled by the business. See here, characters are arising here, right? The characters are arising here. Controlled by the business as a result of past transaction and with huge economic benefits. These three things are very important when you are writing the definition. You can omit the prepositions, conjunction, anything, but these three characters should be included in your definition. Okay, so what are the examples for this? See, land and buildings. The land and buildings, that means your own. When you, so what is the land and buildings? How you identify? And I said, yes, you can control your land when you purchase building, purchase land or purchase of buildings like that. You are purchasing. So it is as a result of past transaction, and also it is controlled by the business, right? You have purchased it, you have taken the ownership, right? And you are getting through this land and building, you are obtaining future economic benefits, because with this use of asset only, you are going to sell your products. Understood? So how let's see machinery? Yes, machinery, purchase of machinery. Purchase of machine, it is result as a past transaction, and it is controlled by the business and gives future economic benefits. Same as furniture, equipment, stock, it is having the same way. Right now, let's go debtors, including receivables. Ramai, who is this debtors? First of all, I'll be explaining it. Yeah, okay. I will be explaining it. After this introduction to accounting ends, what will be on the new terminology, because this is already, you may be grade 9 or you may be grade 8. Okay, you may be doing your O levels earlier like that. So before going to the next lesson, okay, before going to the next lesson, I'll be giving you some small terminology terms. So what is, again, what are assets, and also what are the debtors, creditors, that, because these are some new words, right? So like, oh my God, what is this? I don't know what is debtors, what are creditors, and what is a debit, and what is a credit, what is a ledger. We'll be explaining that one. So first of all, let's go with the data. Okay, I have it. Okay. A data. A data is, for example, when you are selling, when you are selling your goods or your service, and selling your service, you're providing service, right? So let's say goods sales, when you're selling goods, okay, you are telling that you are giving on a credit basis. Everyone know what is credit basis, right? You are taking that, okay? But you are telling, okay, today I don't have money. You give me, I need this one, but I'll be giving you tomorrow. So that is called credit basis. You are giving the money later. Because of these sales, so you're selling your goods on a credit basis to the customer. That customer becomes your debtor. That customer becomes your debtor. Something is debt for you. He is debt for you. See, he's debt for you because he should give you money one day. He or she should give he should give money one day. So that is called as a debtor. So debtor means what? So how we can consider debtor as an asset? Let's go for the process. Yes, it is as a result of a transaction. Sales of goods on credit. Because of this transaction, okay, because of this transaction, okay, because it's that's a result of transaction. And also the other thing, what you can control, yes, you can control it. It's controllable, right? You can control your debtors, right? You can control it. So that factor is also the other factor is it is giving you future economic benefit. That means they will be giving you cash in future. So that is how debtors are considered as an asset. Okay. The next one is cash at bank and cash in hand. You know how it is, right? Okay. The next one, let's see. So this is one of the important things in your syllabus, right? It is regarding the diversification in assets. Okay. If you're seeing hereby, assets can be categorized into current assets, and non-current assets. What assets means what? Assets should have three characters. What? It should arose as a result of past transaction, and also it should arose, and also it should be controlled, and also it should have a future economic benefit, right? So you should know all this. So you can categorize your assets into current assets and non-current assets. So now my current asset means the current. Current means something which is having a period of 12 months. Current means something called as something which we call as 12 months. So, and non-current means not 12 months, right? Not. Let's it like that. Okay. So see here, one we can do as current asset. Okay. This current asset means, so how this concept has emerged means now, right? If you are taking an asset, they are taking the changing the color. If you are taking an asset, any asset, okay, when you are selling or when you, okay, no example, okay, that means an asset which can be converted. You can convert it. You can convert it into cash within 12 months. That means what? Within 1 year, if you can collect the money, or whether you can convert that asset into 12 months, that is considered as current assets. What are the examples for that? Yes, your stocks, right? Stock means you can't be resolved means your closing your stocks. Let's say stock means you can convert it, right? So you are not going to sell your stock after you can however convert it right between 12 months. Within 1 year, you can sell it, right? Your stock. Another one is okay. When your debtors are who? Debtors are the debtors who are debt for you to give the money within 12 months. So that debtors are we are considering as the value. Okay, that means we can convert the cash within 12 months. So another example is stock debtors. You can consider as cash. So other things you can take is you can also consider bank balance. Bank balance. These are some examples. What are the examples? Stocks debtors. So stock and debtors, so stocks, debtors and cash, bank balance. When you cover with cash, it means how you cover it in cash, right? So bank balance, these are some current assets. This is an example. So that is what we can in simply we can do what is the current asset means that asset which can convert within 12 months. Okay. And simply we can do that means the non-current asset means the assets. Example, it is the assets are cannot convert into cash within 12 months. It's very hard, right? Example like lands and buildings, you can't convert, right? You have it takes many years, right? It takes more than 1 year. So, for example, we can see as example land and building, land and buildings, machines, furniture, equipment, and motor vehicles. So these are some non-current assets. So you can see what are the difference. So I'll be going through what we have studied. Okay, so what we learned that. Okay, what we learn. Okay, what is an asset? So assets should have all these three characters, and then what we did, we categorize it. Okay, we categorize assets. Assets can be categorized into two as current assets and non-current assets. So current assets are the assets which will convert within 12 months. Example, stock, debtors, cash, balance, and bank balance. So non-current assets means the assets which we cannot convert within 12 months are considered as non-current assets. Example, land, buildings, machine, furniture, equipment. You can simply tell the non-current assets are the assets which other than the current assets. Other than the current assets, you know that means you can convert within 12 months. That is easy, right? Current assets identified. Then other than the current assets, others are considered as non-current. Simply you can tell. Okay, so we have finished what is assets. Now, Lamai, so that is what they have explained it here. Now, okay. The another thing. The other element we are going to learn is liabilities. So Lamai, liabilities means what? Liabilities are the payables of a business. Payables means what? You have to pay one day. You have to pay one day. That is called as payables. That had arose as a result of past transaction and could be simply considered as liability. That means because of past transaction, yes. What if you're obtaining a loan? A loan obtained from a bank is a past transaction. Okay, it is between you and a bank, so it is a past transaction, and because of that, you would have to pay. So you have to pay in the future. That is called as payable deficits, are simply known as liabilities. So the business is bound to repay these liabilities in future. Therefore, these are considered as what current obligations. What they are considered as? They are considered as current obligation. That means you have to do one day. When these liabilities are settled, the resources which generate future economic benefits will flow out from the business. Now, when you are settling the bank, you are paying, right? Because of that, the asset will flow out from the business. You have to understand that because of an asset, because of the liabilities, your asset will be flowing out. So, and also you should see, okay? Okay, so here you can see what are the examples. In settling a bank loan, it requires to pay cash and the cash outflow from the business. So you're obtaining a bank loan, it arose as a result of past transactions, and that loan means you have to pay one, it becomes a payable, and when you are settling your bank loan or when you are paying your bank loan from the cash of the business only is going. So here it creates an outflow of the business. Assets generate inflow to the business, while liabilities create outflow for the business. Okay, so you can see what are the characters. Yes, it is arose as a result of past transactions. It's outflow of the economic resources. When you are settling, your cash will be going. That means what we can see is your cash is going and you have a current obligation. Current means however you have to settle. So like that example, bank loan and credit cards. Like that also we consider this liabilities, current liabilities. I said current means something between 12 months, right? So when you are settling the liabilities means when you can settle the loans within 12 months, it is considered as current liabilities. Examples. Now, another term we are going to learn here is what are these trade creditors? What are these trade creditors? Okay, so we learned what are the next one is we are going to learn what is liabilities. So liabilities are known as the payables. Payables in the business. So what are the in the business? In the business. So liabilities are the payables of the business. So what are the characters you can see? The characters are arose as past transaction, also you'll be having outflow next, and even current obligation. And then we are categorizing liabilities into two as current liabilities and non-current liabilities. So what are current liabilities, Lamai? Current liabilities are the liabilities where you can settle. settle. We can settle within 12 months. So examples are what? Examples are what? Trade creditors. So trade creditors. So trade creditors. What are these trade creditors? Okay, I will explain you in a way that students will understand. Okay. Trade creditor means money. Now you are okay. You are purchasing. When you are purchasing, when you are purchasing goods and you are purchasing goods on credit. Credit means when you are purchasing the goods on credit, that supplier becomes your creditor. You are credited to him. Creditor means that you have to give it 1 week. That means when you're purchasing goods on credit, that supplier becomes your creditor. Okay, so that is creditors also. But what is trade creditors? What is this creditors? Some teachers tell us trade creditors. Some teachers are trade creditors. Trade creditors means trade means when you are purchasing or selling. Purchasing is purchasing or selling. When you are when that means here, creditors means so it is considered for purchasing, right? It is considered as a purchasing. So when you are purchasing your goods on credit, that supply becomes a credit, and you are purchasing good means that is the goods which you are going to sell. Understood? Or which you are going to use in a business to provide the sale. So that is why we are considered as that we are not taking as a supplier. We are telling him because supplier means that now you are purchasing good on cash. That when you are purchasing good on cash, he also becomes a supplier. No, for that we have a very different word we use for that person. He is a creditor because we should give money. The business, that means the business should give money 1 week. Okay. So these are the examples for current liabilities. The next one, and what is okay? Another one also that is called in your textbook, electricity. What is this accrued concept? I'll be doing that one. Accrued. I'll be explaining each point. If you don't understand, you can contact me. Okay. So this is accrued means what? Accrued concept means accrued payment. So you can accrued payment means okay. Accrued payment. This accrued payment means when you don't you pay when you pay later. When you pay later. Accrued payment means when you are paying later. For example, let's see. Example, accrued payments means okay. Accrued payments means when you pay later. For example, you have the electricity. Okay, when you are having the rent, you're having the rent. So this month, let's say this month, like October, let's say, so the business have to pay for the rent for this month, October. But he is not paying on October. He's telling, okay, I don't have the money. So he's going for the that tender, and he's saying like that, owner, I can't give you the money this month. I'll be paying you for the next month. So that becomes your payable. That means you have to pay one day, right? If you are paying your money for this month, it becomes expense. But when you are telling that, okay, I'll be paying it later, it becomes accrued payment. It can be any payment, rent, electricity, anything, telephone charges. But when you are paying later, for example, the rent for this, if they are to take for this month, when you're not paying the relevant payment for the relevant month, and when you are paying for the, that means for that month, the example for October, then you are paying on November, that becomes accrued payment. That means you are not paying on time, you are paying later. That's what you can say simply as accrued. Okay, the next example is, that is the examples. Now let's go, what is this current liabilities? Non-current liabilities. So non-current liabilities, you can simply say that, okay, where you can settle when you cannot settle within 12 months. When you can't settle within 12 months, that is considered as non-current liability. For example, there are some installments. When you obtain a bank loan, okay, when you're obtaining bank loan, they are given, you have to pay installments, right? When that installments is, example, let's take bank loan. Bank loan, and when you are paying, when you are payable, when you have obtained a bank loan, when you are payable, you can only pay after, if it is exceeding money only, you can pay. When it is your bank loan is payable, then 12 months. Then even textbook, it is there. So I hope that you have understand this concept. Okay, Lamar? Okay. The next one, let's see. So we have learned what are current liabilities and non-current liabilities. Now, let's go to the next one, which is equity. So, example, equity. Now, let's see. I will explain in PDF. It's very easy, right? So, next one, we have a very important, which we call as equity. Now, equity means what? Okay. Now, if a business have liabilities, right? You can say that the value of the asset belongs to the owner. Okay, that means the assets of the business of the assets that belong to the owner of the business considered as equity. That means we can say that, I hope we understand at once, the assets that belong to the owner of the business, it is considered equity. For example, let's see. Okay. Now, you are having assets, and also We're having assets, right? We're having assets, and we're having liabilities. Having liabilities. What happened when you are, that means you have assets and liabilities. After settling your liabilities, the liabilities the asset that remain, second, the asset that remain is equity. So that's why the assets of that belong to the owner of the business is called as equity. But if you are taking a deep into the definition, that means now you are having assets and liabilities. Now, when you are after settling all your liabilities in bank, loan, creditors, any accrued payment, after settling all your liabilities, the remaining amount from the asset is there right now. That is your equity. So that is what we consider as equity. So we will be learning with all these things through the accounting equation, like what is the basic accounting thing, so that I will be explaining you with the example. But it's also explain the example in the textbook, so it will be very helpful. Like, so let us assume that a business has 500 worth of assets and a bank loan amounting to 200 rupees. Rupees 200 out of 500 of assets have been used to settle the bank loan, and therefore the remaining of the asset worth of 3 belong to the owner. So the, what they are taking, okay. Now let's go into a very simple. Okay. You are having an asset. The asset is worth rupees. Let's say it's simple, right? You have your liabilities. Liability. It is amount rupees 10. Okay. Let's say 50 here you have asset of 50, which is worth 15. You have liabilities, so you have to pay liability. Then the equity will be Lamai. So you are settling with the asset. That means this is the asset value. From the asset value, you are settling your liabilities. So your equity will be equal to 40. So this belongs the asset which belong to the belongs to the owner. And so there is the remaining asset. Okay, the remaining asset which belongs to the owner. It is known as the equity. Okay. So see here the 40, the remaining asset which belongs to the owner. Okay. So now let's us go. So the next topic will be line. It will be regarding income and expenses. With income and expenses, I will be doing it in another session. I will be doing that one only because when only little by little you have to go, you have to understand this one. So yes. So today let's see what we win. So today by this it is going to end. The second session is end. Okay. Okay, so that was the dream. So let's see what we learned today. Lamal. So today we learned, okay, what is an asset. Okay, then after that we learned, first we learned what is an asset. Then we learned what are the current and the non-current. Then we are coming to liabilities. Same. Then to non-current, current, and non-current. Current, and also we learn what is non-current. Next, we learn what is an equity. Apart from that, we also learn from current assets, we learn a new concept called as debtors. And also from current liabilities, we learned a concept called as creditors, and also accrued payments. So we asset means these are some tangible assets. So however they're tangible, right? That means other resources which are controlled by the business, and it results of a past transaction, and also giving the full equivalent benefits. Current means the asset which we can convert within 12 months. So asset means future inflow. And I'll be giving a short note here. Current means you cash where you can convert into cash within 12 months. And cash within 12 months. Current asset means where you can't convert into cash within 12 months. And debtors means credit, say the credit. When you do a credit sales, debtors are given a right. That means debtors are the customer, credit customer. The credit customer. So non-current asset means the asset which can't be converted into cash in 12 months. And liabilities means current. That means you can pay within 12 months. They can pay within 12 months. So creditors means what? Creditors means when you do purchase, when you are when you're purchasing things on credit. So that means when you're purchasing on credit basis, you have to pay 1 day. Purchase order, you have to pay 1 day. That is called as creditor. Accrued payments means payments after payment period. Payments after the payment period. And then we learn what are non-current assets. So non-current assets means when you are taking the loan, right? When you are taking the loan, when you are settling the loan after the, when you are not settling, when you have to settle the loan after 12 months. So equity means the value, that means inventory assets minus liability is simply called as the equity. Okay, so in the next lesson, okay, we will be learning what is income and expenses, and then by that our introduction to accounting session is done. So in the next session, we will be doing past paper questions. With all these related to it, will be I will be also giving you some short notes regarding this chapter, and also I will be giving you some questions and also past paper questions. And all that is there. So after that, means only that please think this. So I hope that you enjoy this video, whether you just see whether you have understood this part. So then I will be just giving you in a very printable format, so it is very easy for you to write. If you have anything to write, then you can write. You can see it here. It's like here my drawing, so you can see there. Yes, you can see. So through this also you can write a short note. There is short note here, and also I have here. You can even go and see the video. Something are there. So you know what is this question, right? This question means whether you are able to make decision or not. Okay. So Raman, thanks for hearing my lectures. So thank you. I will come to the next. Okay, thank you.